At least 60 more are expected to open by the end of 2022.
We always feel like we're just getting started at Shake Shack. Somehow, we kind of describe ourselves as a public startup. We have a huge footprint and white space out there that we can grow globally, and we're going to continue to do that.
The pace of expansion is nothing new for this company. What may be different is the shape. Shake Shack has thrived in high-density urban locations, which provided 60% of revenues before the pandemic. But return-to-office patterns during COVID have been unpredictable, hampering sales growth in cities. Now Shake Shack is exploring new formats as it extends its footprint in suburbs.
This is not just a reaction to COVID. This is stuff that we've been working on before. What COVID did was accelerated the pace and excitement, frankly, for some of the things that we'd been planning before. Drive-through amongst them as the most important.
We were right at a pivotal moment of thinking drive-throughs were obsolete, and then COVID hit, and it was a saving grace.
When you get out into the suburban areas, drive-in becomes incredibly important because that's convenience. And if a significant percentage of your business is drive-up, you need a smaller facility. So the investment can be smaller.
This is the first time the company has ever, put in a drive-through. We opened up our first one in December of last year. We have 6 open, very exciting stuff.
Drive-through lanes offer long-term opportunities to build revenue and increase margins. But right now, they carry a higher price tag.
Overall, we've seen a rise in our build costs. We've talked about 10 to 15% higher build costs across the board. Things are just costing more. It makes site selection ever more important. It makes all of the work that we do in real estate and that whole process, incredibly more important.
Since Katie Fogarty became CFO of Shake Shack in June 2021, inflation has risen at a record rate, making her job that much harder.
Everything that enters our business, commodities, foods, cost of building restaurants, is getting more expensive. I don't see that ending anytime soon. And I think we've got to continue to plan for it.
If you look at the price of beef, if you look at the price of dairy, eggs, all of these core things, even paper and packaging, it's just meaning that everything costs us more and more and more, and we're not alone. This is happening to the entire industry right now.
The industry is also dealing with a sea change on the labor front. Hourly wages have soared, and the Great Resignation has hit restaurants hard.
Labor costs aren't going down because of the training and turnover at the 30, 60, and 90-day mark. If someone's, can even figure the job out, do they stay? And that's still not under control whatsoever. So while maybe like the actual wage inflation can taper, turnover and training costs are still elevated.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at the 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Shake Shack margins have come down from pre-pandemic levels. At the same time, the company's cash position has improved.
During COVID, we actually took 2 opportunities to raise capital. We have a fortress balance sheet like we've never had before. Good timing, good planning. So when we use that money, we're looking for a great return.
The area with the highest potential return is right in Katie Fogarty's wheelhouse, advancing Shake Shack's digital transformation.
It's amazing to sit here and think that this is a company that had essentially hardly any digital sales prior to the pandemic. And when the pandemic hit, we went full force on digital with the app, web, with third-party delivery. And here we are now with 43% of our sales still coming from digital channels, even as our in-Shack business has doubled.
And that doesn't count the kiosks, right?
That does not count the kiosk.
So what kind of investment was that? Was it a home run? Is that something where you're like, Randy, this paid off big time?
Well, it's something that we continue to invest in, and we continue to see opportunities to improve our app, improve that guest experience, improve the ways that we're incentivizing our guests to really lean into our digital channels. If you simply kind of look at what the higher frequency we get from those digital guests, moving more and more of them into the channels and continuing to invest to drive frequency of that base, it's a really good recipe for strong long-term traffic growth.
Coming up, digital investments have boosted Shake Shack's business. Katie Fogarty assures me they're not done innovating.
We want the kiosk to be able to identify who you are and what you like to order when you come into the Shack.
This is Bloomberg.
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
From its early days as a kiosk in Manhattan's Madison Square Park, Shake Shack's brand has combined simplicity and style. The menu features classic items with a creative twist, while the ingredients and service are a significant step up from fast food. The concept was an instant success, but maintaining growth and staying relevant comes with a complex set of pressures.
We've come out of the pandemic with a new world, and where something that might have been an evolutionary change has been a revolutionary change. We've made changes to the way we eat. We've made changes to the way we operate that might have taken years have been compressed into months and days.
The role of CFO in a company like ours that's so dynamically growing, so constantly changing, and focused on digital is critical. And Katie plays such an amazing role there. She's not just moving numbers around. This is not your grandfather's CFO anymore. The digital infrastructure, the way we think about things now, is a monster that needs to be fed all day long, every day, and is always hungry. And you could probably have 150 digital priorities today that all our teams will fight about. Ops wants this, tech wants this, marketing wants this, I want this, Katie wants that. Katie's job is to take all that prioritization, think it through, understand which one is going to have the best return on capital and which ones have no return on capital, and you still got to do them anyway. That's the reality of the world we live in right now, and it's critical to lead that in the right way.
I visited a Manhattan Shack with Katie Fogarty. Our first stop inside the restaurant was an ordering kiosk.
Then on the burger side, you can see the option here for the bourbon bacon jam burger with shallots on top, the avocado bacon burger as well, our beloved Smoke Shack.
The kiosks are an investment in engagement.
We just see a guest kind of sit with the menu and really appreciate and understand how they can customize their order or the different add-ons that they have. So we really do believe that this provides them with an even better experience than going to the cash register.
What's the payoff? I mean, the cost to put one of these in compared to how much more a customer spends on the kiosk.
We do see a very nice lift off of the kiosk. And actually, this is not even, very fancy kiosk technology. It's an iPad. What has more investment tied to it is just the constant innovations that we've had to make the kiosk functionality better and better. And, we're driving towards kind of a parity situation where the kiosk and the cash register have exactly the same functionality. And we want the kiosk to be able to identify who you are and what you like to order when you come into the Shack.
Improvements like these take resources. Shake Shack's general and administrative expenses have risen as the companies put capital behind digital initiatives, and the changes ripple out from there.
As our digital evolution has been underway, we've had to make a number of adjustments to the layout of our current existing Shack base and really rethink the flow of the Shacks that we're building in order to really capitalize and enable and let our digital business thrive. In many Shacks, we've taken out cash registers, we've moved them around. A lot of times it's 2 or 3 cash registers that are just taken down to 1. We've had to really rethink the way that the flow of our guest journey is in our Shack. So one perfect example of it is we put in pickup shelves here at most of our restaurants. Guests who are looking for that to-go experience can come in and pick up their order to go, and they don't have to sit there and wait with everybody else who is waiting for their food ready to be made. We are constantly monitoring and identifying ways to be better in the kitchen. And it also goes down to the products and the types of offerings that we have. We never want to have something that is going to overly complicate our team members' journey. We don't want to have something that's going to slow us down operationally. So you'll see a lot of our LTOs just really be building on core menu ingredients and allowing our teams to kind of do a little bit different with what we already have.
LTO stands for limited time offer. It might be a special shake flavor or partnerships like a recent venture with distiller Maker's Mark. But Shake Shack's core offering is the burger. And it's not just any burger. The company pledges to source premium meat that's ethically raised and costs more even when inflation's not at historic levels.
I've heard a lot about the importance of the quality to you guys in terms of ingredients. Doesn't that get expensive, especially right now? Quality beef must be, rising in terms of price.
I mean, we've always used premium ingredients, and those premium ingredients, they come at a higher price. We always have an eye on the margin, but we know also at the end of the day, you're running a very dangerous game if you're trying to reverse engineer into something that you want from a P&L standpoint. The guests might not like it.
Shake Shack standing firm on quality, and it's also practicing transparency, announcing plans to raise menu prices by 5 to 7% in the fourth quarter of 2022.
Shake Shack is the best example, the definition of a fantastic value proposition. However, not all customers across this country have, that change in their pocket to pay for that average ticket at lunch or dinner. And I think they're very comfortable with that. And I think it's very interesting and very different than what others are doing. I mean, it is who they are. They're not trying to escape it. They're not trying to be something they're not. And the fact of the matter is, if they picked a different path and it's fine, it would be hard to pivot back.
We are serving fresh, whole muscle, hormone antibiotic-free beef. That is a totally different thing than you're going to eat at nearly all other restaurants, certainly traditional fast food. And you got to pay more for that, and you should want to. And when you see things like 10 for $1 or 2 for $5, we can't do that because our ingredients cost more than that to bring it to you, and you should want to pay more for that.
And frankly, who am I to argue?
So crunchy, the bacon's so crunchy. I like that.
It's delicious.
I might finish this.
Coming up, why Shake Shack believes it's got everything to gain by going global.
I mean, there's so many opportunities for us to add to our licensed business.
We see it as a huge white space opportunity for us.
And Katie Fogarty tells me what skills she's relied on while making the transition from Wall Street analyst to CFO.
I would say just a lot of grit. I never thought it was going to be easy, and it's proved to be quite the learning opportunity.
This is Bloomberg.
Japan Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Nearly 90% of Shake Shack locations in the U.S. are company-operated. Around the world, it's a different story. The business has grown internationally by working with licensed partners to operate restaurants. That's a trend they intend to keep going.
Today we have Shake Shacks in 16 countries, everywhere from China to Singapore to the Philippines to London and beyond. We see it as a huge white space opportunity for us.
Many restaurant brands struggle to move outside of their own core market in the United States. Perhaps it's something that's very New England, and when they try to move outside of the New England area, guest reception is just not there. Or it's a West Coast brand that takes 50 years to bleed across the country. The thing about Shake Shack and the magic about it is this is a company that can sit here with only 200 restaurants in the US today, open up one in a tier 2 city in China. And the guest reception for that restaurant is mind-blowing. These are some of the largest opens that we've ever had.
We have big plans for our licensed business. It's a really asset-light, cash-accretive business for us. We love it. And we love it when our partners overseas make a ton of money because they're going to build more restaurants. We're going to all continue to grow.
I mean, there's so many opportunities for us to add to our licensed business. And certainly, I get so many text messages from people traveling the world. If there is a Shake Shack there, guess which one this one is? And if there's not one, why don't you have one here?
The first Shake Shack in mainland China opened in 2019, and there are now more than 20. Although the government's zero COVID policy has weighed on revenues, the company is committed to expanding its presence.
China is a fascinating business for us. It's one of the most exciting and biggest opportunities Shake Shack has. Over the initial couple of years of the pandemic, they fared much better than we did here and much better than most places around the world. Today, it has been erratic. It's been lockdowns, it's been closures. But here's what's amazing. The resiliency of the Chinese people, our team over there, is unlike anything I've witnessed. It is one of the toughest places to do business in the world, but our brand seems to be really resonating with people over there right now, and I see it as one of the biggest areas of growth we have at Shake Shack.
Restaurants haven't been resonating with Wall Street recently. The sector has underperformed the S&P 500 for much of 22, but the industry is historically resilient.
Restaurants are undervalued right now. As a person who has been following restaurants since I had hair, I think restaurants are probably the most flexible and most creative of businesses that we have.
The routine and the social engagement happens at restaurants, and that's not changing just because we may or may not go into recession. It just isn't going to change. And so the restaurant stocks will rebound. This industry is the third largest employer, of all the population of workers in this country. I mean, this is like the fabric of the economy. And the economy will rebound and restaurant stocks will go up.
If you want to trade in and out of Shake Shack, this may not be the time for you. If you are a believer in the brand of Shake Shack for the long term, like we are and have been, we're going to create tremendous value for our shareholders over time. We've done that. Shareholders should measure us on, are we building things for the long term? And if you want to be here for the long term, my sense is Shake Shack's going to be a good bet.
One of Shake Shack's long-term assets is a bright new CFO. Katie Fogarty now has a year of experience under her belt. I wanted to know what she sees when she looks ahead.
What's the opportunity for Shake Shack in the next 10 years that excites you the most?
I have to say it is in watching our people grow and develop. I see a very strong growth roadmap here for the company in terms of units and sales potential. But what that really means at the end of the day is that our hourly team members are able to grow a career with us in a way that is unique to Shake Shack and cannot be found at many other restaurant brands. We have a number of people who started off as hourly team members and are now making six figures and have equity because they've grown up through the system, and they're paying it forward by training other people to allow them to have such a great career path as well.
What's the challenge over the next 10 years that keeps you up at night?
It also goes with people. It has been a very challenging staffing environment for the restaurant industry as a whole. It's been well telegraphed that, some people have just left the industry altogether. And so, we know when we have high turnover, we're not operating at our best. And so I do think that there's an amazing opportunity that once kind of the world stabilizes and returns, back to normal, that we have people considering the restaurant industry as more of an exciting long-term career.
In terms of your role as CFO, how do you see that, or your role with this company, changing and developing over the next 10 years?
I think that, it becomes ever more important to have a great grasp on the insights that are driving your business, on the factors that are driving your business. And, that's very important for a CFO to do, but also to collaborate with other business leaders within the company to help, kind of cross-pollinate strategies. Whatever I do in a vacuum is not going to be nearly as impactful as our entire executive leadership team coming together and acting on something. And I think that is ever more apparent sitting on this side of the table than it was on the other side as a Wall Street analyst.
Speaking of that, what skill or what area of knowledge do you think has helped you the most in your first year as CFO?
I would say just a lot of grit. This has been a very challenging industry for sure. I never thought it was going to be easy, and it's proved to be quite the learning opportunity. Coming in every day, just excited to learn something new and make a difference wherever you can, knowing that I'm sitting here with a team of people growing a company that will potentially have an impact on a number of people's lives going forward.
So what advice would you give someone else then who maybe is watching and gets promoted to CFO? What advice would you give to a future CFO?
What advice would I give to a future CFO? I guess it would just be get into the details, super, super deep, and really kind of understand and ask a lot of questions, peel the onion. I think a lot of people just don't go deep enough and don't ask the questions so that you actually cannot, if you're not versed on what's going on, you can't find the root cause and you can't drive change. So, I would say get into the details, have an open mind. It's an incredibly fun job for sure. Working with people who are coming, everybody's aligned here to drive the future of Shake Shack, but everybody comes at it from a different angle. So it's very exciting to work with an amazing team of people.
I'm Matt Miller. This is Bloomberg.
We don't have enough women founder CEOs who are getting funding. So basically less than 2% of VC funds go to women. Less than 1% go to women of color. And so in this innovation space, I said to myself, what's the best way to use capital to move things for women? And that's when I started to say, okay, I actually need to move some money into the venture capital space, and I want to do it smartly. I mean, the first goal is to make money. I'm not putting my money out as a social impact. I'm putting it out to make money. But I wanted to go behind funds like Aspect Ventures, that's run by Teresa Gao and Jennifer Fonstadt, who are looking at these opportunities, and they have a thesis around, my gosh, there are so many opportunities there if we go towards funding some of these women businesses.
Some LPs have said to me, all we care about is returns. Some of the best investors may not be the best people, but they have the best returns. What do you have to say to those people?
I have to say you're investing in what you know. And so you need to look at what trends are coming in the nation and how you're going to address them. Women are 85% of consumer dollars spent. Women control 70% of financial decisions in the house. So if you're not investing in products that go towards females or a women-led company, you're missing an opportunity because you just don't see it.
No one covers the world like Bloomberg.
The writings on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
with unmatched reach and resources from more than 120 countries. The moment news breaks, 24 hours a day. Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Hydrogen has a very special place in the universe. It's the first element on the periodic table. It is the most abundant element in the universe. And when clean energy advocates think about what can we find which would be as easy to use as fossil fuels, they think about hydrogen. The fuel that will, when burned, only produce water.
We like to imagine that if we just built enough of these and these, we could ditch fossil fuels and save the planet. Unfortunately, it's not that simple. There are some things where you just need a good old-fashioned combustible fuel. Now, startups around the world are betting that hydrogen can become the fuel of the 21st century.
Deflation is a terrible thing. Inflation you could tolerate.
You could trade anything as a trend fall.
When you think about Bitcoin, I don't think it's a currency. I think it's a commodity.
Today, we're in an everything bubble.
Genial and unflappable, even in the heat of a corporate crisis. That's the reputation of C.S. Venkatakrishnan. Known as Venkat amongst colleagues, the former Barclays markets chief took over as chief executive after Jess Staley's abrupt exit in November last year. In his first TV interview since getting the top job, we talk about the bank's so-called universal model of retail, corporate, and investment banking. So what are the challenges that lie ahead, and where does he see opportunities? Will Barclays have to increase provisions for loan losses as the cost of living crisis gets worse? Over the next 30 minutes, we talk strategy, investment banking in Europe, the future of the City of London, and how inflation will change the banking world with the man who's in charge of Barclays for the last 12 months. Venkat, thank you so much for speaking to Bloomberg. So 12 months into the job, what have you learned about yourself and the bank?
The last 12 months have been a wonderfully educational experience. About myself, I've learned how much more I needed to learn about banking, including running a large organization, finding ways to encapsulate what our ambitions are, and to conveying it to so many people, and then visiting all, this global footprint of the bank we have. It's also, it's been a wonderful year in terms of the bank's operational performance. We've managed a bunch of crises, and we've managed them relatively well, I think. But it's the start. We are in the middle of a tough economic environment.
So in terms of strategy, the strategy hasn't changed that much from your predecessor. Is it about execution, or is it a different lens that you're looking at it with?
So I was part of the team that set up the strategy 7 years ago. And our strategy then was to simplify our footprint, focus on building a global investment bank that was, very highly competitive. And we are now number 6. We're the biggest European investment bank. It was about doubling down on the UK, where we want to be a leading financial institution in sort of everything, retail and wholesale. And it is about building up a very specialized consumer business in the US, which we've done. We like the footprint. The businesses are operating well. I think now it is the striving to excellence, which is to make sure that in all the businesses which we do, clients and customers know what we are about. We do the things that we do very well. We don't have hobbies. We are very focused. We execute well, and it's about excellence.
But can you really compete with the U.S. bank in terms of having an investment bank? Can Europe have that leverage, or are you always going to be one step below?
So we are competing. We are number 6. We've been gaining market share and revenue share in our markets business for many years. And you know, we are under no illusion that we're not going to catapult, nor do we want to catapult to number 3 or number 2. But we can be very good at what we do. And if we are good, people will transact with us and work with us. And you can make a very good living at the size we are.
Do you want to get bigger? Is now, if you look at the pipelines and things that are coming through, is now the right time to employ more bankers?
Two slightly different questions about getting bigger. One is, I think that as long as we do well and organically we grow, that's fine, right? I wouldn't want to take large steps, but if it happens in an accumulation over a period of time, that's welcome because it's gradual. About bankers, I think it's a question more about what sectors of banking. We've made a big push in sustainability, and we continue to expect to do that. And obviously, you know, pulling out of some old economy sectors or reducing it, not to zero, but there is a shift in the banking wallet, and we respond to that. And I think sustainability is very important.
Are you expecting more IPOs, more pipelines? You mentioned the environment that's a little bit uncertain at the moment.
Yeah.
What does the next 12 months look like?
I think it is going to be a difficult environment for the first 6 to 9 months of that 12. I hope by the summer, when people are able to sort of see the end of the rate rising cycle, it may not have happened by the summer, but hopefully you can forecast the end of it with reasonable confidence, then businesses will feel more confident themselves in what they want to do about their capital raising and capital planning. But I think it'll take a little time before we see that clarity.
What's your biggest concern out there on the markets? I know you had some good results. A lot of it has to do with also how you traded. Your traders performed very well, but we have a very uncertain environment. We don't know what inflation looks like, the cost of living. You have exposure to mortgage. There's leverage out there. What keeps you up at night?
Well, I think what we've had this year is a series of incidents which would have been difficult to forecast at the start of the year. Yeah. Even at the start of the year, I think across the industry, people were cautious because they knew we were at the start of a rate rising cycle. It's never good for credit assets in those periods. It's not good for equity assets generally in that period. Then you had the Russia-Ukraine war. And then here in the UK, you had that little volatility with gilts and LDI. So there are pockets where there could be leverage, and there are pockets where there may be rapid movements. And in this kind of a rate rising cycle, you would expect to see that happen. So it's rather than being specific worries about certain things, it's being generally aware that you're driving a car when it's rainy and the roads may be slippery.
So what does that mean in terms of risk management? What does that mean in terms of you preempting some of the things that could go wrong?
We have been operating through the year with relatively less risk and what I would call relatively less long biased risk, meaning expectations of asset prices to rise than we would normally have done or had done a year or two ago. So we, in the language of traders, we manage from a defensive position.
Which means that things could still go wrong in unexpected ways, or that you feel confident that you have this. I mean, you lived through the financial crisis.
Yes.
And every 2 weeks somebody says, this is going to be worse than the financial crisis. This is worse than the 70s. What kind of crisis are we going to see, and what does it mean for the banks?
Yeah. First of all, I don't think, as far as the banking system goes, this will be worse than the financial crisis. I think banks are much better capitalized, much better risk managed, and much more aware of the importance of doing that than they were back then. And the regulators are also much more intimately involved and engaged with the banks in understanding bank exposures. So I think it's not going to be like that. I think from our point of view, and speaking for Barclays, what we have to worry about is the impact on consumers. We are starting at a point where people have strong balance sheets and employment is very high. So these are very good initial conditions. But squeezes are coming in different ways. In the UK, to a greater degree than the US, you've got the energy price squeeze. And also in the UK, to a greater degree than in the US, you've got a squeeze coming from higher interest rates and mortgage prices and rents. Because it's more of a variable rate market. It's more of a fixed market than it used to be, but it's more variable than the US is, which has a 15 or 30-year fixed market.
But you're not seeing that, right, in consumer spending right now. You're not seeing it in mortgages either. Is there worry that we're complacent, and then at some point next year, early next year, it hits us hard?
Not that we're complacent, But even though we've started off in a good condition, there are factors that are eroding that strength of the consumer balance sheet. What I'm hoping you see is what people will call a soft landing and a shallow recession, helped by the initial conditions. And so what you might see is an increase in unemployment. You might see some credit weakness among customers, but it won't be so bad that you see distress in society. However, it has to be managed carefully, and it has to be managed aggressively with a balancing of the budget, and that's what the Prime Minister has said in the last couple of days.
A lot of the satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Talk to me a little bit about the last 6 weeks. So you mentioned the guilt. I mean, was there a moment where you were in the office thinking, like, as Barclays, you're one of course, the players in selling and buying gilts, with the margin calls coming in and saying, like, I don't know what happens in the next 2 hours.
So first of all, I think that the volatility was managed extremely well by the very effective, targeted, and time-bound actions of the Bank of England. So I think buying gilts, buying inflation-linked gilts, and then the repo facility that they put in, working with the banking system, all helped ease the pressure in the crisis. And you've got 10-year gilt yields now back below where they were at the day of the mini budget on the 23rd of September. As for us, I mean, we are large in the gilts market. What was important for us, as we saw it, was this was not a solvency issue at all for the pension system. It was a liquidity issue. And it was a liquidity issue because what was a very important feature of the UK pension system, which, by the way, I think is a good feature of the pension system, which is a matching of assets and liabilities, which employed leverage, created a liquidity problem. So a liquidity problem had to be managed. And the liquidity problem was managed by the government intervention or the Bank of England intervention, the repo facility, which allows people to borrow against assets rather than sell them, and by slowly releasing the pressure. And, so far, so good.
Do you think that will change, actually, regulations surrounding pensions in the UK?
So I don't know the answer, but I think what is important is that the UK pension system in aggregate is very well funded. It's about 125-130% funded ratio, which is extraordinarily good, which gives it a good starting point from which to manage to a less leveraged future.
Is liquidity the biggest concern for banks right now? I mean, we're again hearing, the U.S. Treasury Secretary having to do things maybe to put a bit of extra liquidity or to pad it out in the Treasury market.
Bank liquidity, I don't think, is an issue. We've had liquidity regimes. The funding models are much, much more robust than they were in the financial crisis. I think part of what people are worried about and what they saw in the gilt market was the liquidity in underlying trading, which is that these markets are not deep with small bid offers in large sizes of trades as they used to be 15 years ago. And I think part of it, our banks are more prudent in managing their risk.
So that's a good thing.
It's a good thing, but it has a consequence that the big providers of liquidity have moved away from the banking system to the buy side.
Do you worry about shadow banking? And is there any crossover? Does that, if you look at the system as a whole, if there's something wrong with shadow banking, does it impact the big banks?
So it impacts the big banks, and by shadow banking, I'll narrow it. I'll narrow it to, let's call fintech companies, right? So it impacts the banks in a good way and a bad way. So in a good way, what they've done is they've provided digital technology ways of giving services to customers, which customers like. And it's made us up our game, right? And faster than we would have otherwise. And shame on us for not having done it earlier. Now, when they go into credit, which some of them have done, they have less regulation than we do, which is perhaps not good for customers who deal with them, who may not get the protections they do if they deal with us, and perhaps not good for them if they don't lend with quite the rigor and standards that more established companies might. On the second issue, that's a supposition. Let's see.
What's your relationship like with the new UK government? Have you had calls? Have they given you assurance about windfall taxes?
Well, I think the government is brand new. So we obviously, many of the faces are very familiar faces, and we've been in communication with them for many years, and we always are with the government. And we await to see their proposals on taxation, on fiscal policy, on all aspects of it.
Where do you see the City of London being in 4 or 5 years? I mean, that's maybe too long a time frame. Should I say 12 months?
Well, it's both too long and too short. Here we are in the city, and this city has been the center of finance for 300 years, and it needs to be the center of finance for 300 more years. We certainly would wish that that were the case. And it is the center of finance because of an excellent regulatory system, transparent, fair. It is there because of great availability of talent and infrastructure, soft financial infrastructure and hard financial infrastructure. And a part of that is also a stable, predictable taxation regime. So we hope that all those elements and ingredients remain and continue to allow the city to flourish. And, the Prime Minister spoke about investing in education in Britain. And if you think about what drives the financial sector, I mean, you meet many of them. It's about the wonderfully trained people in the UK and the wonderfully trained people outside who are able to come and work in the UK.
I mean, the UK has lost something, or the City of London has lost business to other parts of the world in terms of, financial capitals.
Yes.
What do you need from the government today for that to be reversed?
Well, some of it is what others do, right? So once Brexit happened and you could not passport financial services to London, all the major banks had to set up trading enterprises in Europe. So that is irreversible, let's say, for the time being. I think other than that, what we need is a continuation of what London has provided. Education, infrastructure, people, great regulatory regime, and a stable and predictable, fiscal regime.
Venkat, until not too long ago, Barclays had a activist shareholder on its back. Do you think about that?
You always have to think about it. I don't think about it from the point of view of our business mix. I do think we have a good business mix, and that activist shareholder came because he thought we should sell our investment bank. He could not have been more wrong. I repeat it, he could not have been more wrong. The investment bank has been what has kept Barclays flourishing and quite apart from many of our competitors in the fact that, we performed extremely well during COVID. We were able to have a more diversified business model. But I think for many banks like us, where our valuations are low, you've always got to be worried about what is driving bank valuations.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Is Europe overbanked?
Europe is, again, separate Europe from the UK.
Okay.
I don't think the UK is overbanked. I think part of what drives bank valuations, especially in Europe versus the US, is there is some worry about business model. I think in our case, we've got the right business model, and what will drive our valuation is solid performance, excellent performance, as I said. Repeated, excellent performance. I think in Europe, banking is still fairly nationalized, not nationalized and state-owned, but by country. And I think we have to see at some point the experiment of one large European bank crossing borders in a meaningful way, and then we'll know.
When do you think that will do you think that will happen, or is it just a dream? We've been talking about it, I feel like, for 2 decades.
Yeah, I mean, it's a question more for the European bank CEOs. I think it should happen. I think the test case should happen, and now is a good time. You know, when you go through a period like this, there will be some banks which will benefit from consolidation and ownership by a larger entity. And I hope I see it happen, and it'll be good for Europe.
So your bank is doing pretty well. Others are doing less well. We talk about Credit Suisse almost day in, day out. Have you been able to get some business from clients that no longer want to bank with them?
Well, you know, business goes every way in the banking industry. Obviously, where Credit Suisse has pulled out of certain businesses, such as the prime business, we got some business from their clients. But look, they announced a big restructuring. We wish them well. It is important for the banking system for there to be many players who are strong. And I think, you know, with this restructuring, hopefully Credit Suisse is on a good upward trend and regains the prominence it used to have.
Venkat, talk to me about some of the human errors, right? The recession that we've been talking about and how much that cost you. I know that there was also, I don't know if it's punishments coming or some, you know, steps towards the people that did those mistakes. Where are we on that?
Yeah. So we had an overissuance of securities in the US. It was completely avoidable. It is one of these embarrassing moments you hate to have when you're a CEO of a bank. It is, however, it was a human error in a very narrow way. We have done both and had an external investigation on it, an internal investigation. We have made good by all the clients affected. We have had a settlement with the SEC. We cooperated from the first minute fully with all our regulators, and we dealt with the matter internally. We are in the final stages now where individuals who were affected or involved in this are being assessed. We've got a standard process by which we do that. And yes, there will be, you know, implications for certain individuals, but that process will play itself.
Venkat, I mean, through your strategy, we talked a little bit about, you know, the global economy. Do you worry that this wave of inflation is just going to get worse? When will we reach peak inflation? When will we know that we've reached peak inflation?
You will know that the rate of change of inflation is stabilizing when the central banks start signaling it that in their rate rises, going away from 75 basis points, 100 basis points to something more normal and natural. Now, mathematically, there will be some forces that will bring inflation down, you know, just because base effects, as they call them. And I expect that will happen sometime in the middle of next year.
Is there a danger that central banks mess this up, that they raise interest rates too much?
Look, there's always a finely calibrated issue about when do you stop. And I think many people have sort of raised two worries. One is that there's a sort of supply chain-led element of this. There's an energy shock element of this. Employment is at all-time highs, relatively speaking, and that people have not seen such a hiking cycle in 3 decades. Having said that, I think the officials are all across the world are all very, very experienced, and I think they will find the right way to calibrate it.
How difficult is it in this uncertain environment, frankly, to calibrate where you want to grow businesses geographically in the world?
Well, I'll speak for Barclays. We've got a real strength of the business in the U.S. and the U.K. We've got a good investment bank in Europe and a trading business. We're headquartered in Ireland, but got a large trading presence in France. And then good presence in Asia, both in the Middle East and India. We've got an excellent investment banking franchise in Singapore and Hong Kong. I expect that footprint to remain broadly as it is. We have some very interesting partnerships in Australia. We might do some others. But I expect the broad footprint to be as it is. The geopolitical complexities, which are also rising, makes people more cautious also about which countries they want to go to.
Have you had to increase wages? And I'm not really thinking of the high-flyer bankers, but just to match inflation in most of these places.
Yeah, so we did a fairly large program of wage rises in India, where we've got a large number of employees last year in 2021. In the UK, we did an interim adjustment in August of about 4% for a lot of our workers. And then we are working through another one for the end of this year. And we did one in the US also late last year. So I think inflation, especially as it affects some of our workers, we're going to have to look at it and we're going to have to respond.
When you look at the return to the office, I think bankers have to be back, 4 days a week?
Yeah.
How's that going?
It's going well. Look, I think we always have to create a balance. There's a level of flexibility that's come into the workplace since COVID, which I think is good. I think some of the stigma attached to working from home has gone away. And I think that's really important, especially for those who are managing young families or have other pressures that require them to spend more time at home or close to home. And I think we should continue that and should continue that in important ways. Some jobs require you to be in the office. Our trading floors are largely full 5 days a week, and that's the way it should be. Our bank branches here in London also need to be staffed, and they should be. For some other functions, it can be less, but I do think it's important for people in all functions, at all levels, to be in the office. This is an apprenticeship business at the end of the day. And it's important to have that productivity from being face-to-face.
Venkat, when you look at the strengthened dollar, this could be a shorter term. It could last for a very long time if you look at King Dollar. What does it mean for Barclays?
Well, as a financial matter, it's actually good. We have about 40% of our revenues in dollars. We've got a fairly big business in the U.S. More broadly, though, world economies will have to adjust. And that adjustment process can be painful. And you can see the pain it's inflicting in Europe and the UK. Exports will be subsidized, but import prices go up.
Venkat, thank you so much.
Francine, thank you very much for having me.
The tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it, building it, building it.
I think venture capital is not a scalable business. I think it's a service industry. Entrepreneurs do more than anyone thinks possible with less than anyone thinks possible. I love entrepreneurs. I love serving them and helping them build teams and amazing companies to solve big problems.
How do you become the world's most successful venture investor?
I think it's important for successful venture investors to be entrepreneurs.
John Doerr obviously made that connection. He was an early employee at Intel before defying its president, Andy Grove, and leaving for a job in venture capital.
And he said venture capital, wow, that's a real estate business. That's not a real business.
John joined Kleiner Perkins in 1980 when it had just 4 partners managing about $100 million. He made his mark with early and controversial bets on 2 little-known startups, Amazon and Google.
Google was controversial within the partnership and within the industry, and it turned out to be an epic idea and company.
Now John serves as chairman of Kleiner Perkins, which operates 32 funds with more than 675 investments. But John's focus has moved beyond the internet revolution to the climate revolution.
I went around and kicked up a lot of controversy, declaring that the internet had been underhyped. I say the same thing today about the climate revolution.
You're one of the most famous venture capitalists in the world, in part because you had a lot of deals that were spectacular. 2 of the most spectacular were Google and Amazon. So when you saw the guys who created Google and you saw Jeff Bezos, do you say these guys are going to create world-class companies, or do you say maybe they'll get my money back? What did you think in the first time you met them?
So I met Jeff when he was 30 years old, and he and I were both computer science kinds of geeks, and Amazon had a business plan. It was growing to be the world's best bookseller online. And so I invested, I think it was $8 million for 15% of Amazon, and Jeff and I set out to build an amazing world-class team. And he had a vision, which is true to this day, that if he had the broadest selection with the most affordable prices and the best customer experience, that flywheel he could get to grow by obsessing on the customer. And yes, I believed he was successful. No, I had no idea that it would be worth $1.2 trillion today. But the same thing happened a few years later when I met two 21-year-old Stanford University PhD dropouts, Larry Page and Sergey Brin. And in that case, I invested $11 million for 11% of the company, which was very controversial. They had no business plan, no revenues. And I asked Larry Page, he sat across the table from me, and I said, Larry, how big do you think this can be? Without batting an eyelash, he said 10 billion. And I said, surely you mean market cap, right? He said, no, I'm talking revenues. He said to me, John, you have no idea how much we're going to be able to improve search and how important search is for finding all the world's information and services.
Let's talk about your background for a moment before we get into the climate issues. On your background, where are you from originally?
Born and raised in St. Louis, Missouri.
What did your father do?
My father was an engineer, an entrepreneur. He was a great dad, and he was my hero.
So you went off to school at Rice. How did you happen to go to Rice?
Well, I knew I wanted to go to a great engineering school, and Caltech and MIT were too far away from St. Louis, but I could drive to Rice, and I fell in love with the place.
Right, so after you graduated, then what did you decide to do?
Well, I knew I wanted to start a company with friends, so I decided that I'd try to learn something about business. I got an MBA degree from Harvard, took a lot of courses in my spare time at MIT, which was great, and fortunately landed a summer job between my first and second year at a new small chip company by the name of Intel. And that brought me to Silicon Valley, the Valley of the Heart's Delight, these orchards, and to Stanford, and to where I've lived and worked ever since.
So you worked for Intel for a while, and the leader when you were there, as I understand, was Andy Grove. And Andy Grove, when you said to him, I'm going to go work at a venture firm, did he say that's a great thing to do?
No, he said, Andy had this way of reaching inside your chest, pulling out your heart and holding it in front of you. And he said, John Doerr, don't you really want to be a general manager in a technology company? And I said, well, sure. And he said, well, why don't you come run Intel's, I'll add this, non-existent software business. And I said, no, I don't think that's right. I think what I'm going to do is join Kleiner Perkins and work on venture capital. And he said, venture capital, wow, that's a real estate business. That's not a real business.
So you joined Kleiner Perkins. It was then a relatively smaller firm than it is today, I assume?
Sure, there were 4 partners, Eugene Kleiner, Tom Perkins, Frank Caulfield, and Brooke Byers.
And it managed a modest amount of money then?
Perhaps $100 million.
So did you ever think that the world of venture capital would become the explosive world of technology that it's now become at that time?
No, I didn't. But I didn't think much about that, because what I really wanted was for Kleiner Perkins to commit to back me when I found a company that I would start with friends. And they made that commitment because they'd done that several times before. The business plan for Genentech was written inside Kleiner's office. The business plan for Hybridtech, monoclonal antibodies, inside Kleiner's office. So Eugene and Tom were atypical venture capitalists. They were really themselves engineers and operators and successful entrepreneurs.
In the venture world, you're committing relatively small sums compared to the buyout world per deal. But do you have to get all of your partners to agree, or can you just say, I'm going to do this and hope you'll support me?
So inside Kleiner, and it may be different in other firms, you don't have to have everyone agree. And indeed, some of our best investments were very controversial. Google was controversial within the partnership and within the industry. It was a $100 million valuation on a company with no revenues and no business plan and founders with no business experience. And it turned out to be an epic idea and company.
So you've written that one of your young daughters said to you at one point, what are you doing about climate change? And she kind of propelled you into doing something more than you have been doing. Is that story apocryphal?
That's entirely true. Do you remember when you saw Al Gore's first movie, An Inconvenient Truth? Well, I took my family and some friends to see that. and then we went home for dinner and a discussion. Some of my Republican friends at the time said, it looks like the world's getting warmer, but we're not sure it's man-made. The science wasn't so clear then. But when it came to my 15-year-old daughter, Mary, David, she looked straight at me and she said, Dad, I'm scared and I'm angry. Your generation created this problem. You better fix it. And the room went silent. I had no idea what to say or even what to do. And so from that, my partners and I set out to learn more. We traveled the world. We went to the Amazon. We saw biofuels in Brazil. We went to China to wind solar thermal in the Mojave Desert. And we crawled lots and lots of labs and began gradually over 3 funds to invest in disruptive entrepreneurs who wanted to address this problem. We put about $1 billion in 70 companies over 3 funds. And last I checked, those investments were worth about $3 billion. So, okay, not off the charts, but 7 of our 8 solar companies were crushed by policies from the Chinese government. We learned a lot. We had a lot to learn. And now there's a resurgence, I think, of entrepreneurial, academic, and investor interest in solving this problem because Mary is still scared and still angry. I'd like to help entrepreneurs solve the climate crisis and build durable, important companies across the economy.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
I met with John Doerr on the Stanford campus. A night at the movies was the seed for what became a school on sustainability.
Our ability to live is what is at stake.
Do you remember when you saw Al Gore's first movie, An Inconvenient Truth? But when it came to my 15-year-old daughter, Mary, David, she looked straight at me and she said, Dad, I'm scared and I'm angry. Your generation created this problem. You better fix it. And the room went silent.
John Doerr didn't stay silent for long. He investigated green energy all over the world. More importantly, he and his wife gave Stanford a $1.1 billion gift and persuaded others to donate almost $600 million more. The result? The Doerr School of Sustainability.
Stanford's such a great institution, and their plan to address climate was so thoughtful and ambitious that I and my family felt compelled to back it.
Stanford's first new school in 70 years will open this fall. Its 3-part structure includes academic departments, interdisciplinary institutes, and a sustainability accelerator.
We are, in fact, in many ways, kind of reimagining academia, and the accelerator is all about solutions of problems that are going on. These are technology solutions that can be scalable. These are policy solution, nonprofit. These are launchpad for big ideas, including people.
For the roughly 1,000 undergraduate and graduate students in the school's inaugural class, there's little question that the jobs will be there when they graduate. The International Labor Organization estimates that 24 million jobs worldwide could be created by the green economy by 2030 alone.
People need to be trained in critical thinking of how to look at sustainability challenges.
And John and Arun are aligned on their goals.
I don't think there's a single institution by itself that can address climate change and sustainability issues.
Importantly, David, we need lots of great climate schools like we have lots of great medical schools. And so I think this is leading to a lot of interest all around the world, and that's a good thing.
So recently you wrote a book about climate change and the importance of doing something about it. I have it here. It's called Speed and Scale. What's the essence of the book?
It's actually not a book. It looks like a book, but what it is a plan. Because the climate movement has had lots of goals for a long time, but what this is an engineer's plan for how we get from 59 gigatons per year of carbon pollution to net zero by 2050. And the plan is available for free. It's on the website speedandscale.com. There are 6 components to this plan. Andy Grove would call these objectives. Jim Collins would say they're big, hairy-ass goals. But they are, first, to electrify our transportation, use batteries and electric vehicles instead of diesel and gasoline for transport. Second, decarbonize our grid, generate our electricity from wind and solar and safe nuclear instead of from fossil fuels. Third, fix our food systems. Voluntarily eat somewhat less meat, fix our agricultural systems and reduce food waste. Fourth, protect nature. That means stop burning the rainforest and doing deep ocean trawling on the seabeds. Fifth, and this is a hard one, clean up industry. How we create the steel and the concrete that we need for a growing planet is a huge source of carbon emissions and a hard problem to solve. When we've done as much emission reduction as we can for these first 5, there are still going to be some remaining carbon emissions that we have to remove, either through trees, natural means, or direct air capture, which is what they call mechanical trees. All told, the Speed and Scale plan takes us from 0 to 59 gigatons by 2050, and importantly, halfway there by 2030. We have just 7.5 years to get this done in time. And so the plan includes 4 accelerants, ways to make sure that we get it done fast. Those are winning the politics and policy, turning movements into more than protests, making them real actions, innovating, doing more research on the new. So we'll lower the costs for what we have now and innovate for the new, the now and the new. And then finally invest like crazy to get this transition successful.
So let's suppose I live in India or in China. I'm a citizen of those countries. I say, well, you in the United States, you polluted the world for a long time. We're still developing countries. We want the right to develop our economies, and we shouldn't be having the same standards that you have. What do you say to that argument?
I say they're right. And I also say that this is a problem that we all have, and we all have to solve together. The Indians right now emit far less carbon per citizen than we do. Historically, the U.S. is the world's largest emitter of carbon pollution. Currently, China is the largest, but we're the wealthiest country in the world. And so we've got to go first. We've got to prove that this can be done without ruining the economy. It takes only about 2% of GDP to make the necessary investments. And then we're going to have to, together with China and Europe, help the developing world fund this transition.
And you think that's realistic in the near term?
I think it can be done with a plan. We've had climate goals for a long time. What we haven't had is a plan that's realistic, time-bound, pragmatic, and that's what you're holding in your hands.
So my thinking has been over the years that many people don't support climate change agendas because they think in the end it's going to cost them more money if we make changes, and secondly, they might lose their job. How do you respond to those concerns?
Well, let's talk about both, the jobs and the money. The first is between now and 2030, there are going to be 25 million new high-paying jobs created around the world, and every country should strive and want to get those jobs for their citizens. So there's maybe 4 million fossil fuel-based jobs that would disappear. Those stakes are pretty clear. Now, the next question is, what is the cost? What is the investment we're going to need to make? And the estimates are around $1 trillion per year. That's what the IEA estimates. 2% of global GDP. And what's on the table is who are going to be the leaders in the great new industries of the future.
And suppose President Biden says, you know, John, this is really difficult. I need more help in Washington. Can you come and serve in my cabinet or do something to really make this effort stronger than it currently is. Would you say yes to that?
That would be a very compelling request.
What about your investors? They would say, no, John, please don't leave, right?
I would have to weigh, can I be more helpful outside or inside the administration?
But your goal as a venture investor was to get good returns and produce good companies, and they create jobs. But now you are in the mode, to some extent, of trying to change the world in a way you think is better. Do you find you're a different kind of person as a result of this? And do you find that people like you more because of this, or they like you less because of this?
I don't know if they like me or not. But at the start of the internet revolution, I went around and kicked up a lot of controversy, declaring that the internet had been underhyped. I say the same thing today about the climate revolution. I think the move to a new clean energy economy is not some kind of green kumbaya. It's a revolution. There's going to be real winners, real losers. It's imperative that we do this. And as Larry Fink said, there will be 1,000 private unicorns, companies worth $1 billion working in climate. I think what we're seeing here at Stanford is that climate science is going to become the new computer science. It's where all the young people want to work for all the right reasons. My partners and I decided not to back Elon Musk. That's probably the worst investment decision of all time.
Set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Let's suppose I'm a Stanford graduate, or most likely a Stanford dropout, because that seems to be better. I dropped out of Harvard, I dropped out of Stanford, and I have a business plan, and I want to do something on the internet or something in climate change, and I send an email to John Doerr saying, I have a good idea, can I get a meeting with you? How many of these proposals do you get a week, and how do you sift through the ones you can actually meet with?
So our team at Kleiner Perkins gets 3,000 proposals a year. We read them all. We take meetings with about 1 out of 10, 300 of them, and we'll make, in an average year, 40 or 50 new investments.
So if I'm one of the people, 1 out of 10, that gets a meeting with Kleiner Perkins and John Doerr, what's the
just most successful investments? What distinguished them from the average Kleiner company? The average Kleiner investment, by the way, returns its capital 45% of the time. So a majority of the time they don't. They fail. But one of the bedeviling things about venture capital is you can make many, many, many times your money on a very successful investment, and you can only lose 1 time your money. Those 5 factors, David, were the following: technical excellence, strategic focus on a large existing or new market, outstanding management, reasonable financings, and finally a sense of urgency. Those were the 5 distinguishing, outstanding factors, and no new venture possesses all those. And so telling your story about how your technology is excellent and you're going to transform this market, and being open to help in filling out some of these other needs is what will get us over the finish line.
So do you ever have regrets? I have regrets on deals that I missed and passed on. I passed on Facebook when Mark was in Harvard. I didn't think Jeff Bezos was going to make it. I told him that when I first met him. Do you ever have regrets on deals you didn't do?
Oh, all the time. And deals I should have found that I didn't even see. When I first came to Silicon Valley, I hung out at Stanford on the 2nd floor of Margaret Jacks Hall. And down that hall was Andy Bechtolsheim, who founded Sun Microsystems. John Hennessy, who became president of Stanford, founded MIPS. Jim Clark of Silicon Graphics. What I didn't do is go down into the basement where Len and Sandy were starting Cisco. So that was a miss on my part. More recently, I had the opportunity to invest in an electric vehicle company. And the conventional wisdom was venture capitalists ought not to invest in electric vehicle companies, not new car companies at all. There have been 400 new car companies in the nation's history. Every one of them but one has gone bankrupt. But I was still very attracted to the market, and we had the choice of backing a brilliant car designer by the name of Henrik Fisker, or an ambitious, slightly crazy entrepreneur by the name of Elon Musk at Tesla. Well, we made the wrong decision, but Tesla did very, very well, and so did electric vehicles.
When I make a mistake, I only think about it for the next 10 or 20 years. How long does it take for you to get over these things?
Well, I don't obsess on these, but I won't ever forget.
And today, when you agree to back somebody, do you monitor them carefully? Do you help them? Do you open doors for them? What do you actually do other than give them money?
It depends what they need, what will help the most. Usually it's recruiting and growing the team. We're in a worldwide race to get the most talented people to believe in and pursue the vision. I like to say, David, ideas are easy. Execution is everything.
So what do you do to tell them that they can do a better job on climate if it's not their main focus? Let's suppose it's a computer company or a smartphone company of some type. Do you try to get them to focus on climate change as much, or not their concern as much?
No, I try to embrace their plan, their agenda. And they're coming to us saying what they want to do about climate, because they know to attract the talented workers that they're competing for, and to retain them, they need to be more than mercenaries. They must be missionaries.
So if somebody is looking at you now and says, all right, you're one of the most successful venture investors in the world, what would you say to young people that the qualities it takes to be a great venture investor? You have to have a lot of courage. You have to be willing to do things that other people say shouldn't be done. What is it that makes a great venture investor?
Well, there's different formulas for different people. My good fortune was to have a technical background, to listen very carefully, to learn, to be inquisitive, and to be service-oriented. You know, I think venture capital is not a scalable business. I think it's a service industry. And in most service industries, the winners, the McKinseys of the world, are a lot like the CEOs that they serve. They dress like them, they talk like them. And so I think it's important for successful venture investors to be entrepreneurs, to have a real connection with the challenges that teams are facing when they're trying to build businesses.
While Teslas and the like make for good headlines, the reality is that even if every car on the roads today went electric, it wouldn't be enough to curb global emissions to avoid catastrophic climate change. Greenhouse gas emissions from transportation account for about 29% of total U.S. greenhouse gas emissions. So what about the other 71%?
Buildings across America burn fossil fuels to operate. What we want to do is make that all electric. Instead of burning oil and gas, to give us the energy and the electricity we need, we want to do 100% clean energy, all electric. We want to turn buildings into Teslas. Just like a Tesla or an electric vehicle is all electric with no fossil fuels, we want to do that with our buildings. And if we can do it in one building, we can do it in all buildings. And if we do it in all buildings, we'll reduce 30% of U.S. greenhouse gas emissions.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes, or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
I saw a Shark Tank trailer.
Yeah, that's gonna be fun. That's gonna be fun.
What was the most surprising thing about it?
How kind Mr. Wonderful actually is. How soft he is. I guess he is. Yeah, he's a really nice guy.
Did it give you any flashbacks to your YC days and the panic days of early entrepreneurship?
Yes, and that they do about 45 minutes of shooting for 7 minutes of airing.
Yeah.
And so if the entrepreneur makes a mistake, and there are a few of these,
yeah,
it's totally fine.
I'm Tony. I was a product editor at Square.
And the four of us came together about 6 months ago to work on software for small business owners.
That's the application video Tony Xu and his DoorDash co-founders submitted to get a ticket into Y Combinator's prestigious startup accelerator back in 2013. Fast forward nearly 10 years later, and DoorDash has gone from a struggling food delivery story to a public company that's the U.S. leader in delivery. But the big question facing companies now is how to navigate a potentially prolonged economic downturn. Joining me on this edition of Bloomberg Studio 1.0, DoorDash CEO and co-founder, Tony Xu. Tony, it's so great to see you.
Great to see you too, Emily.
In person.
I know.
You went public in the pandemic. We were talking remotely, but there's nothing quite like an in-person interview. So thank you for being here.
It's great to be here.
You basically grew up in a restaurant, as I understand it. What was it like leaving China, moving to Illinois, and starting this new life?
It was a classic immigrant story. In many ways, I would say, looking back, almost a fairy tale-like journey where, my parents came to the U.S. with $250 in the bank. We immigrated to Illinois, Champaign-Urbana. My dad got his degree at the University of Illinois. My mom put food on the table by working 3 jobs a day, one of which did happen to be in a Chinese restaurant where I moonlighted as a dishwasher. So I got to hang out with Mom that way as a way of growing up, and I did that. I mowed lawns, and that's really kind of how I saved up money to, buy Nintendo games and do all the things that were the wonders of my childhood.
What do you think you learned from that? Mowing lawns early, washing dishes early?
I think Two things. One, looking backwards, it's just that you have to work to actually get things done. I didn't understand what it meant to live off of food stamps, to buy groceries, or free and reduced lunch, every day inside school. But it was a very empowering feeling to buy my own Nintendo or earn my way to buying my first Apple computer. The second thing was really just the power of independent thinking. My parents, because they were so busy just trying to make a life for our family, that I was largely left alone. So I grew up playing basketball, watching TV. That's how I learned English. I grew up moving around a lot as a kid. And as a result, I think that gave me a lot of time to realize that it's pretty important to think for yourself.
So you studied engineering at Berkeley, you went to business school at Stanford, and you actually started out as an intern at Square.
I did.
I can't tell you how many people have said to me, Tony Xu was my intern at Square. That's how long I've been doing this, and how, DoorDash just kind of came out of nowhere.
Yeah, it was actually a pretty stiff competition between finishing school. Jack Dorsey and Keith Raboy were trying to convince me to leave Stanford and work at Square full-time. It was a fun and busy period of my time, but I enjoyed both.
So how did the idea for DoorDash come about, and the decision to not work for, Jack Dorsey and Square, which I'm sure was also kind of intoxicating, right?
The idea for DoorDash really came from this, lifelong interest in helping these physical business owners, really people like my mom. So we talked to hundreds of small business owners, and it was surprising to us that even in 2013, delivery was not a solved problem. There were business owners who would show us literally booklets of delivery orders that they would refuse. We're talking about thousands of dollars per week, which is, the difference sometimes between making payroll and actually, surviving. And they would just turn them down because they were delivery orders, which to us was a really novel and unfortunate phenomenon, and frankly, unnecessary one. And that really became, the impetus to start DoorDash.
You started out driving for competitors, right?
I was driving for a lot of different services to try to actually understand, logistics. My background, as you mentioned, more in engineering, math. I thought I was going to be a cancer researcher. That's pretty much what I spent all of my undergraduate days at Berkeley doing. That kind of 180'd into world of business. And so I think it's really important to really learn things for yourself, to think from first principles. Kind of, again, back to that independent thinking mindset I talked about as a child growing up.
Did you drive for Uber, Lyft?
I even drove for, services that were a little bit older, services like FedEx or Domino's, and really try to explore, how does delivery work? And it was really trying to understand, every component part. It sounds really simple, right? Bring you a burrito from point A to point B, but there were actually 20 steps involved in that delivery. It just didn't appear as obvious to the naked eye. So the first 2 years of DoorDash's life, we did deliveries almost every single day.
So where did you go from there? Early days, I know Elon Musk has said starting a company is like swallowing glass and staring into the abyss of death.
One of the first ones came actually as early as month 3 of the company's life. So we were maybe 11 weeks, 12 weeks old as a company. There was a big Stanford football game in September. And, long story short, we were late on every single order. And we had no ability to turn off the site, so it was just horrendous. Everyone in the company, all 12 of us, were delivering, and everyone, rightfully so, was furious because of how late we were. And so we had a decision to make. Do we do the right thing and refund, every single customer, which would have cost us about 40% of our bank account? Or do we, do a less right thing and survive another day? Because it was very hard for us at that time to raise capital, which, was something true for DoorDash's early history. And, it took us about 30 seconds to click, submit, refund. And, the lesson for us always as a founding team, and frankly even today as a company, is we'd rather die chasing excellence than live to be mediocre.
It wasn't so obvious either in the earlier years. I remember in 2016 you did a down round. I think you actually came on the show around that time. How did you weather the doubters and the people who didn't believe?
There were about 1,000 days in the desert between 2016, 17, and 18. Sometimes with company building, so long as you can convince yourself, because time is your most precious resource, you should keep going. And if you can keep going long enough, you might get lucky enough to make it.
So over time, how did you balance quality with the need and desire to scale, and then scale globally?
In these types of businesses where it's low margin, high complexity, you really have to figure out what your unit of business is. For us, that was a city. So in order to, before going to 7,000 or 10,000 cities globally, we made one city work. And after City 1 worked, we made City 2 work. And after we started getting higher and higher confidence that we can make baskets of cities work, irrespective of the geographies or what the customer situation looked like or what the merchant makeup was, then we gained the confidence to actually roll out everywhere.
Then came the pandemic. Brian Chesky has said the pandemic was like a torpedo for Airbnb. Was it like the opposite for DoorDash?
It was like the biggest wave behind our back, which had the ability to break us, and it almost did, because we grew 2x in 2 weeks. We went from a singular U.S. restaurant delivery business, that's what you and I would be talking about in 2019, to today, 5 businesses in 27 countries, much more than just restaurants. And so all of that was created in the last 2 years.
The big question is, how much do customers keep ordering out in a high inflation environment?
Okay, so you're moving in on me quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DoorDash went public middle of the pandemic, and I remember actually you were coming on Bloomberg and the price doubled at the open, and we were coming out of obviously terrible economic times, the depths of the pandemic. What did that feel like when, you're going out into the world starting to sell to public investors and the price just doubles?
It was certainly very exciting. It was exhilarating. It was the first time that, our company went public. First time that I had ever undergone any of those types of experiences before. But at the, in the back of my head, it was that saying that you're never as good or as bad as they say you are. And so just remember that.
So tease that out for me a little bit, because the big question is, how much do customers keep ordering out in a high inflation environment? How much long-term sustainability and growth is there really?
Even though COVID is now effectively sustained and we understand how to live with it, customers are continuing to order. Those that joined us during the pandemic, they're still ordering at about the same rates as those who joined us before the pandemic. And that's because eating out and getting things delivered are pretty complementary. On the second point around inflation, I can say that in the last 60 years, in looking at the data, spend in restaurants and in grocery have only declined in 2 of those 60 years, including high inflationary times, much higher than what we observe today. And so what I think I take solace in, even though I see the fact that there is high inflation, is that customers are going to continue spending on food. And our job is to bring greater and greater affordability.
More broadly, the economy is in a tough position. Your competitors have announced layoffs and hiring freezes and slowdowns. Is DoorDash considering any of these?
And I think we've been fortunate mostly because most of our investments that happened during the pandemic really were meant to build new businesses. businesses. And those new businesses have continued to grow. New businesses, beyond restaurants in categories like grocery, convenience, or retail. New businesses overseas. We announced a large acquisition in Volt, that really helped double our overall addressable market to 700 million people. New businesses in building an advertising business. New businesses expanding our services and building a platform to help businesses build their own digital operations.
Do you see DoorDash as more of a super app of the future, or is it something different?
Well, I see DoorDash as really solving two problems. Problem one is how do we bring incremental demand to all the physical businesses as they kind of figure out their own digital in-house capabilities. And the second problem we're trying to solve is bring tools to these businesses.
There's still a lot of competition in delivery. Who do you think survives the delivery wars? Who doesn't, and why?
Well, delivery is a scale economies game. At the end of the day, you can survive even doing deliveries from a singular store. There's still mom and pop pizza shops and Chinese restaurants that do their own delivery.
Do you see DoorDash as a challenger to like Walmart, Amazon?
Well, I see DoorDash, as a champion of local businesses and physical businesses. I don't think that a world in which we just get what we want to buy or consume for a few places is a world that, again, is as worth enjoying living in. So our job is to make sure that all of these businesses, all of the millions of physical businesses globally, can continue to compete.
I do a lot of DoorDash, helps me be a working mom. Whenever I interview you, I get pings from Dashers, and some of them say they don't get paid enough. Some of them seem pretty angry. What's your response to them?
We want the local economy to grow and to thrive. That includes Dashers. We have 3 million Dashers that come to the platform every single quarter. And so it's really important to me what they say. And it's, in fact, why the company, myself included, we still do deliveries, in other words, once a month.
You still do deliveries once a month?
It's why we have a Dasher Community Council that we started 4 years ago now.
I want to see one of your memos after a delivery. Are you sending notes?
I'm texting, it's not even after the delivery. I'm texting, not texting while I'm driving, but texting after I complete the order.
From your deliveries, what have you learned?
Everything, all of the details, everything from pay considerations, everything from operations at a store. Which stores are a bit faster in their operations or more consistent? Which stores are less consistent? Where do you find the last parking space in downtown San Francisco? All of these details matter. They matter for efficiency, they matter for driver pay, they matter for merchant earnings. And so as a result, what I say to Dashers is, please continue to talk to me. I'm just Tony at DoorDash, and we're always trying to make things better. We're not saying that we're perfect, but when we look at the data that we've collected, the average Dasher is making $24, $25 an hour nationwide when they're doing deliveries, and so and most Dashers are pretty satisfied.
So DoorDash has been expanding internationally. Sounds like you're on the road a lot.
I'm on the road. I am on the road.
U.S., Canada, Australia, Japan. Where else? Where next?
Germany, Israel, Finland, a lot of the Nordics. So we're in 27 countries, and a lot of that is run by the Volts team that we were lucky to partner with.
Beyond Volt, how are you thinking about M&A? Are there any verticals or areas in particular where you might be interested in acquiring?
We have 5 businesses: the U.S. restaurants business, the new categories business with a focus on convenience and grocery, non-U.S., international, 27 countries, our B2B business, and our ads business. So we have quite a full plate. On M&A specifically, it's a high bar. M&A, I think, sometimes looks a lot better on paper than can be achieved in reality. And I think it's because you're talking about, at the end of the day, combining human organizations, not just businesses or products or lines on a spreadsheet. I think you have to deliver upon that promise. And so for us, the bar isn't just does it add to our business, but does it actually add to our culture?
You've been piloting rapid delivery, right? Rapid delivery, but rapid delivery seems to be contracting. What are you seeing in your pilots? Is this somewhere you think you'll expand or no?
So I think customers are always going to have expectations that go in one direction, right? I don't think we're going to want things delivered more slowly over time or at higher prices or with less selection. Our core use case right now is lunch and dinner, which is highly repetitive, highly profitable, which allows us to invest in things like fast deliveries. I take that with, great pride. I also take it with great responsibility, remembering to invest in those who maybe don't come from privileged backgrounds.
Watch Bloomberg Surveillance Early Edition for the news you need when you need it.
I'm Matt Miller with Kayleigh Lyons in New York and Anna Edwards in London.
Australia's central bank raises interest rates twice as much as forecast.
Then surveillance for in-depth analysis.
Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, the RBA front and center.
How does Japan get away with not raising rates?
Can it sustain its normal at a time when everybody else is facing a very different reality?
Bloomberg Surveillance. Be informed. Be prepared. Be ahead of the game. To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
You bought Chowbotics last year, but shut it down. This is robotic kiosks, right? I'm curious how you're thinking about AI and, Uber shut down its self-driving stuff, then they've started it back up. How are you thinking about AI and moonshots and some of this, potential new technology and how it could help DoorDash or not? Like, is it just not ready for prime time?
When it comes to platform shifts or new technologies, AI, autonomy, other types of technologies, I tend to like to make the investment. I think that's a more appropriate choice to not miss the shift. However, I think it's very important to get the pacing right. I still think that the merits behind what we were trying to do in partnership with the Chowbotics team was the right idea, in which we can help restaurants effectively build a cheaper cost product. That's ultimately what we were trying to do, but we weren't ready yet with the technology.
You recently joined Meta's board. What's it like working with Mark Zuckerberg?
It's been fantastic. It's been a terrific learning experience, learning from Mark all the way to the incredible management team at that company. It has a broad mandate of different products and as well as initiatives, and it's been a privilege.
Facebook and Meta are, very controversial platform. There's, controversy about whether Facebook is really good for the world, whether Facebook should have as much power as it should. How do you think about that, and how are you advising Mark about how to use that power?
With great power comes great responsibility, and I think Facebook has a lot of influence. And Meta's, different properties, as I'm sure you cover, serve billions of people, every single day. And that's an enormous privilege and an enormous responsibility that they take incredibly seriously.
Like, should any company be more powerful than multiple governments combined?
I don't think I see it, exactly that way, right? Because it's still a contract between the company and its users. And I think what's important for Meta to do, and they're doing this absolutely, is how do we set the guardrails, to make it fair, safe for everyone? And this is very, very, very difficult.
You're also an investor
I'm
in
an
a number
investor.
of different startups. Yes. One of them is Alchemy.
Yes.
Web3 company.
Yes.
Any plans to accept crypto? Any plans for DoorDash to accept crypto?
Crypto right now is going through a period where it's trying to figure out what's next in terms of its use case. I think everyone, myself included, very bullish on the technology of what the blockchain enables.
What do you think could be the future of blockchain technology in food delivery, in general?
Well, I don't know if it's going to get applied directly, to food or to delivery. I mean, I think, it absolutely has the potential to create a new economic infrastructure, right? An economic infrastructure that can really serve as the basis for new banking systems, and et cetera. And so I think that's something more that's tangential to the world of delivery. Obviously, payments is one part of what we do, but it's not the central thing.
So we're going to do a little rapid fire
now,
a little quicker, fun
Sure.
questions. Favorite food?
I've ordered from 1,100 different DoorDash restaurants.
Wow.
So I actually like to try everything.
Your business idol.
There are people in retail that I've admired. You know, the people that founded everything from Walmart to Costco. The team at Amazon, you know, in e-commerce. The team, Elon Musk and what he's trying to do.
What about Elon Musk buying Twitter?
If he has time to run a third company, I think that'd be fantastic for the world.
You grew up in Illinois.
Yeah.
You live in California. You like basketball.
Yeah.
Here. Favorite
Bulls.
team? Bulls.
That's
Bulls,
easy.
not Warriors.
I grew up in the golden days of Michael Jordan, you know, Scottie Pippen, and actually, you know, both the early 90s as well as the later 90s in which they won 3 in a row. I'm still a Bulls diehard, even though we're in a rough patch right now.
I hear you also like to run. You run marathons?
Yeah, well, I don't run marathons today, so just to be clear, but I do run every day. So that's been my sanctuary, if you will, for the past 10 years.
Your kids are still pretty young. How do you think having kids has changed you as a leader?
You know, I think kids are amazing in that they're experiencing the world for the first time. Being able to listen versus to, you know, talk at or to dictate an opinion, you know, I think that's been, you know, a big lesson. I think the second one is the power of curiosity. You know, kids, especially my kids at their ages of 2 and 4, are asking the question why a lot. And I think it's the best question.
It's also so hard.
And it's so hard to answer because, you know, it requires clarity of thinking on everything, on the most basic things to more complicated things.
How has being an Asian American CEO impacted your experience?
Well, I think being an Asian growing up where I was the only Asian, and that was kind of my experience in Illinois, certainly had a big experience, and where it very directly, you know, I saw firsthand, you know, whether it was bullying or discrimination. But I think if I were to more broadly classify that to the privileged position that I'm in today, I'm still a minority in the sense that there aren't as many Asian American CEOs or founders as maybe founders from other backgrounds. And so I think it's that reminder to, you know, one, always recognize that. And then I think secondly, to always keep the underdog mentality.
Do you think you faced more challenges than others because Asian American CEOs are so underrepresented? I mean, Asian Americans are underrepresented in leadership roles in tech, full stop.
I can't say that, you know, for me personally, in building DoorDash, was that the experience. But look, I think you're right in calling out that when I look around me and when I look at especially public company founder CEOs, well, A, there aren't that many. B, when you start filtering for, you know, those from Asian descent, it's a much, much smaller list. And so I take that with, you know, great pride. I also take it with great responsibility, really, and again, remembering to invest in those who maybe don't come from privileged backgrounds, giving them an equal shot at it, and to always to stay hungry.
You changed your name to Tony when you moved
When I was 5, yeah.
to the U.S. You're 5 years old. After Tony Danza, who was the star of Who's the Boss.
Correct.
I love that.
I did. You know, no one could pronounce my Chinese name, and so I said, okay, well, let's just make it easier.
Yeah.
And so I walked with my dad to the immigration office and legally changed my name.
Did life change? Did it feel like life changed after that?
It felt a lot easier to say, hi, I'm Tony.
What's it like being the boss now?
Honestly, I think I don't see myself that way. And I recognize that that's probably not how others view me, but I really view myself as a teammate. And, you know, for me, I think it's trying to make that actually true, make the reality of how I feel true to the perception that maybe others have of me as the boss, and making that distance shorter and shorter.
markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.